Hey guys, welcome back. Today's trade breakdown is going to be on the Aussie Yen pair, which I took last night, the 26th of April 2023, during the New York session. Now I had a poll on my Instagram story and I wanted to see the number of people that were keen to see the trade breakdown. So there were definitely some interest. So let's go into the charts and I'll show you guys what made me took this trade. So I like to start off my trade analysis on a daily time frame. As you can see here, price made a nice downward move, traveling all the way up. A little bit of a downward move again, making its way up here, or made its way up here, breaching its previous high. And now it seems to be like it wants to hit down towards here, or maybe here. Why do I say here? Because we've got our buy side liquidity and our sell side liquidity. Why is it a buy side liquidity? Price traveled all the way up, took out these buy stops, grabbed liquidity. Look at these candles. Big candles, indicating that price is willing to travel lower, potentially targeting here for liquidity or here, like I said before. So let's go into our hourly time frame. These were the levels that were marked on the daily time frame, just being transposed to an hourly time frame. We can see a little bit of a range here. Price made a nice downward move, little bit of a range, and we don't really know what's happening on a 1 hour time frame except for this range here. So let's zoom in again. Now we have a 15-minute time frame. Now it's a little bit clearer, as we can see there are a little bit more movement in terms of candlesticks. If we zoom in on this area here, we can see relative equal highs, relative equal lows. So I normally trade the New York Killzone. What does that mean? So Killzone just basically means when the volatility I should say, it's at its highest. So I'm at a time zone where it's GMT plus 10. So for me, the New York Killzone would be from 10 a.m. to 1 a.m. So during this time before I execute my trades, I like to look to my left and see what price is doing. Are there any significant levels that I should be aware of? So looking to our left, as we can see, price made a little bit of a high here, travel all the way down, aggressively move higher. So buy side liquidity. Price travel all the way down here, now travel all the way up. Can you see this little wick? That's indicating that price has grabbed some of those buy stops, grabbed some of that liquidity. Where do you think it's going to go? Potentially downwards, right? Now bear in mind, when I took this trade, these candles weren't there yet. So if I was to dive into the 5-minute time frame, now this is the buy side liquidity on the 15-minute time frame. I've just left it there for your reference. We can see here, like I said, took liquidity there, took some of those buy stops there. Now I took my trade somewhere here. That's right, somewhere here. But why did I take it here? Because I wanted more evidence and confirmation before I take my trade. So if I look to my left, what has price done? So came down here, made a little bit of a wick here, 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 and here. So relative equal highs. Yeah, you can say that. So we've got a buy side liquidity. So price traveled all the way down. Look at these 2 wicks. Similar to this one, price traveled all the way up, took out those buy stops, grab liquidity. Where do you think it's going to go? Downwards. So why did I take this trade? Let's go into a 1-minute time frame. So we've plotted our buy side liquidity there, and you can see here the candlesticks are more detailed now. Price went all the way up. Relatively big candlesticks, but you can't really miss these ones. Price came down a little bit, pushed up really, really high aggressively. Next thing, price traveled down aggressively again. This is indicating price wants to go back up and come back down quickly, grabbing those buy stops and grabbing those liquidity. That's smart money coming in. So, displacement that has happened. Market structure shift, price move up, down, went up again, came down aggressively, breaking this previous low here. We've got fair value gap. We've got an order block. So this is why I took my trade. I wait for these elements to come into play. Now, if there's only, one or two that's present, I probably won't take it because I want confluences in play that will give me the highest probability chance of a good trade, of a winning trade, right? So these were the levels that I took, that I short for this trade. So price traveled all the way down. Now, why did I take another one here? Look at these candle. It's a big bearish candle. And before that, a bearish order block. That's why I took another one here. So these were the positions that I shorted, and I closed off my trade here. I set my stop loss above this candle, and I didn't have a take profit in mind because, I intended to stay for the entire duration of the New York Killzone. That's from 10 to 1. So I was monitoring my trades really, really closely, trailing them, if you will, as well, just to lock in that trade, moving that stop loss, potentially running into a risk-free trade. Now, it made a little bit of a run up here into the fair value gap and traveled all the way down, but I decided to close it off here because it seems like if you look here, price went down, took up this low, traveling upwards, and for me, this was a 1 to 3 risk to reward trade. I wasn't going to get greedy. The market will only give you what it can. So sometimes it's just about being happy with your trade, like I've mentioned before. 1 to 3 is pretty good. I solidified those profits and went to bed. If you were to continue to see, price actually went ahead and traveled upwards. So I hope this video is helpful for you guys. It's given you guys a bit of insight to understand what goes behind my mind when I execute a trade. Hope you guys enjoyed this video, and I'll catch you at the next one.